Let's dive right into this explainer. Today, we're unpacking a massive financial mystery. We're looking past the flashy headlines to see what's actually driving Lockheed Martin's market recovery. I mean, how does a company post seemingly impossible numbers, yet still leave investors scratching their heads about its actual value? Well, let's break the whole thing down. $230.4 billion. That's the number grabbing all the attention right now across the financial world. Their massive backlog. And when you couple that staggering figure with an explosive $20.1 billion in recent quarterly sales, which, by the way, is up an impressive 11%, on the surface, this looks like the absolute perfect defense stock. But here's the real question we need to answer today. Does this spectacular surface-level data actually make the stock a smart investment right now? Because in the financial world, one giant number can easily mask some pretty complex underlying realities. Before we can confidently say if Lockheed Martin is a buy, a hold, or a sell, we absolutely have to figure out what's genuinely fueling this recovery. If we get that wrong, the entire investment thesis just completely crumbles. Section 1. The $230 billion mystery. Okay, first things first. A super common mistake inexperienced investors make is treating a backlog like immediate cash in the bank. It's not. Think of it more like an enormous waitlist of pre-orders, where nobody has actually paid yet. From the end of 2025 to mid-2026, Lockheed's waitlist grew 19%, crossing that insane $230 billion mark. But what exactly are people pre-ordering? You'd probably assume this massive surge came straight from Lockheed's famous F-35 fighter jet program, right? Actually, scratch that. It didn't. The real driver was an explosive 88% jump in the Missiles and Fire Control Division. We're talking a rocket ship trajectory from roughly $46.7 billion to almost $88 billion. And that massive shift in the numbers immediately forces us to ask, why did the missile backlog explode so violently? That sudden change gives us a huge clue about where the next phase of Lockheed's growth is truly coming from, and honestly, how global priorities are rapidly shifting. The reality of modern warfare has fundamentally changed the defense spending equation. Governments just aren't only buying fighter aircraft anymore. They're aggressively stocking up on missile defense interceptors, precision weapons, ammunition, and long-range space and surveillance systems. This intense global demand drove Missiles and Fire Control quarterly sales up 6% to nearly $3.5 billion. But having a huge order book doesn't automatically mean the company is making cash off of it just yet. Section 2. Profit versus actual cash. We really need to debunk the illusion of their massive 426% earnings growth. You're going to see headlines shouting that earnings per share jumped from $1.46 to $7.94. But comparing today's $1.8 billion profit against an exceptionally weak prior year quarter, a quarter filled with $1.6 billion in program losses, is, well, it's basically financial clickbait. Lockheed's underlying business didn't magically become 400% more profitable. It's really just recovering from an unusually terrible quarter. Since accounting earnings can get twisted so easily by those massive one-time program charges, we have to look a bit deeper. We got to follow the money and look at the actual cash, because, cash is much, much harder to fake. Just listen to the swing in these numbers. In the second quarter of 2026, free cash flow hit over $2.9 billion. Just a year earlier, that number was negative $150 million. That is a massive $3.07 billion positive swing year over year. This is exactly the kind of hard evidence of financial health that serious investors look for. So what is Lockheed actually going to do with all that cash? Management is targeting up to $7.2 billion in free cash flow for 2026. But that massive pile of cash doesn't just sit in a vault somewhere. It fiercely competes across a whole bunch of obligations, paying out dividends, executing stock buybacks, investing in heavy capital, funding R&D, and of course, servicing debt. For the income investors out there, the way Lockheed uses that cash to return capital is incredibly compelling. The number 23 is vital here. It represents 23 consecutive years of dividend increases. The quarterly dividend now sits at $3.45 per share. So this isn't just some defense growth story. It's a very strong capital return story too. But, there's always a catch. Section 3. Risks and changing wars. Like we touched on earlier, a backlog is absolutely not an automatic profit. Large contracts can suffer from severe delays, and fixed-price contracts, they can become incredibly painful if supply chain or production costs suddenly spike. The company has already proven that enormous contracts can become a serious liability, perfectly evidenced by that $1.6 billion in reach-forward losses they suffered just a year prior. The real question is whether they can execute today's enormous programs without repeating yesterday's very costly mistakes. Looking at the actual programs reveals something pretty surprising. Even though sales for the famous F-35 actually went up 9%, the future aeronautics backlog itself fell by $5 billion. Think about that. The aircraft backlog is shrinking while the missile backlog is exploding. This really cements a fascinating shift in Lockheed's identity, moving away from being solely reliant on fighter jets and heavily leaning into missile defense and space capabilities. Section 4. The bull versus bear case. The absolute strongest argument for owning the stock, the bull case, really relies on incredible financial visibility. I mean, you have a $230.4 billion backlog providing a crystal clear view of future demand. You've got revenue up 11%, a massive $7 billion plus free cash flow target, over 2 decades of consistent dividend growth, and surging global demand for the exact missile defense systems Lockheed excels at building. That is a powerhouse combination. On the flip side, we have to look at the bear case. This perspective warns of their heavy dependence on totally unpredictable government defense budgets, plus the extreme capital intensity required to actually build these systems. And most importantly, bears point to the very real danger that Lockheed might repeat past program execution errors. Just because you have a $230 billion backlog doesn't mean you can execute the whole thing profitably. Plus, at its current valuation, the stock certainly isn't priced like a distressed bargain. Section 5. The final verdict. Let's talk about the actual price tag. At roughly $563 a share, trading at nearly 21 times earnings, investors are absolutely not getting a bargain basement valuation here. If you're buying in now, you are actively paying a premium for the expectation of a strong defense cycle, future cash flow growth, and basically perfect backlog execution. So, depending on your personal strategy, here's how you might want to view the stock right now. It's a buy if you're a long-term investor completely comfortable with program execution risk. It's a solid hold for existing shareholders who just want to keep enjoying that dividend income. It's a watch if you're a new investor waiting for a better entry price. And it's a sell if the valuation becomes completely excessive, or if we start seeing them fumble their program execution again. Ultimately, when we weigh all the evidence we've covered in this explainer, the strongest data points to a hold or watch strategy. For anyone looking to enter, the smart move seems to be focusing on buying on weakness rather than simply chasing those explosive headline earnings that, as we now know, are heavily distorted by past losses. Because at the end of the day, a massive backlog on paper is really just a promise. The true mystery you need to monitor isn't the size of the backlog itself, but whether Lockheed can convert those complex contracts into actual hard cash without repeating the billion-dollar mistakes of their past. Keep a very close eye on their free cash flow, folks, because that is where the truth will ultimately be revealed. Thanks for joining me for this explainer.